Pan African and Wits Gold have formed a 50-50 joint venture partnership and has made an offer of 1.7 billion rand to acquire Evander gold mines from Harmony.
The total acquisition price is 1.7 billion, of which 1.4 billion will be paid on the closing date. Now, the effective date of this transaction is on the 2nd of April.
We have a strategy that's completely different to the consortium. Our strategy is that we've got some good mines here in South Africa. We've been building up production from our newer assets, and we've undertaken to diversify.
This has actually been a 3-year journey.
From the 2nd of April, all of the proceeds generated on this asset would be flown or would accrue to the consortium in the form of Pan African and Wits Gold.
We are getting a resource here of 34 million ounces and a reserve of 8 million ounces.
The 1.4 billion that would be payable on closing would be made up of 800 million that we would put debt into the company. That would be on Evander itself, and therefore that debt doesn't sit in Pan African or in Wits Gold. The balance, 600 million, that would be paid 50-50 by the two companies that enter into this transaction, and would be a combination of equity, cash, or company borrowing. Subsequent to the 1.4 billion, starting the first day after closing date is when the first quarter would start, then there would be 4 equal installments of 25 million rand per quarter. Therefore, 12 months after closing date, another 100 million would have been paid for this asset, taking it to 1.5 billion. The last 200 million, that we refer to as a bit of an agterskot payment, the first 100 million would be payable 19 months after closing, and that is dependent on the gold price. And the gold price in the previous 12 months, if that is higher than 410,000 rand a kilogram, then that 100 million becomes payable. If the gold price is below 410,000 rand a kilogram, on the average monthly gold price for the previous year, then that amount will not be payable. 31 months after closing date, the last tranche of 100 million would be payable, and that would be reliant on a gold price that is higher than 450,000 rand a kilogram.
8 Shaft has got huge potential.
This asset's ore body grade is 10 grams a ton.
After the 800 million that's ring fenced, there's 600 million that the two partners each has to carry, 300 million. In Wits Gold's life, we intend at this point in time, it'll obviously have to go to shareholders, but we intend to do a rights issue.
A lot of the areas that we've been dabbling with just weren't explored properly. Exploration that was done by our predecessors, a lot of that core was lost, and we actually re-drilled several of the holes in the Poplar area, and we haven't re-drilled any of the raw spray holes. And then we've done some drilling in the Evander South, which is fairly shallow. Yep, it's going to cost some capital to get into these areas. With those sort of resources, it's got another 50 years.
Some of these projects, like Evander South, start at a depth of only 250 meters. I don't know where in Africa you can go and explore and get this. At the same time, I think it's important to say that we get a highly experienced management team and very capable and experienced workforce. We have a plant here already. It's in South Africa in an area with good infrastructure. I don't know where you can find this in the rest of Africa.
I've got seller's remorse already.